All right, today we're jumping right into a big one. Brandon Turner's The Book on Rental Property Investing. We're going to unpack the key ideas on how you can actually use real estate to build some serious wealth.
So, have you ever thought about getting into real estate investing? You know, for most of us, buying a house is like the biggest financial move we'll ever make. But today, we're not talking about that. We're going to flip the script a little bit.
Yeah, this isn't about finding your forever home with the white picket fence. Nope. This is all about using property as a tool, a way to build wealth, generate some real cash flow, and maybe, just maybe, fast-track your way to financial freedom.
Okay, so let's get into it. First up, let's talk about the dream, right? What's the big appeal? Why do people get so fired up about the idea of owning rental properties? Let's break it down.
And look at these pros. They really stack up, don't they? First, you've got leverage. That means you're using the bank's money. You don't have to front all the cash yourself. Then there's the hustle factor. Your hard work actually pays off in bigger returns. And get this, there are a bunch of different ways to make money from one property, not just one. All of that leads to the holy grail, passive income. You know, making money while you sleep, that's the dream.
This quote really hits it home. Think about it. In the stock market, if you use secret info, you go to jail. It's called insider trading. But in real estate, finding out that a property is cheap because of a problem only you know how to fix, well, that's not just legal, it's pretty much the whole game. It's how you find those absolute killer deals.
Okay, sounds pretty amazing, right? Ready to jump in? Well, not so fast. Because like with anything that sounds that good, there's another side to the story. All right, time for a reality check. We have to talk about the downsides because this is super important. This is absolutely not a get-rich-quick scheme, and anyone who tells you it is, well, they're probably trying to sell you something.
Look, building wealth this way takes a long time. It's not an overnight thing. It can seriously take over your life. You'll be thinking about it 24/7. And yeah, you're going to have to deal with some, let's say, difficult people. There's a mountain of paperwork. And let's be real, like any investment, you could lose money. You have to treat this like a real business, period.
Okay, so we've seen the good, we've seen the bad. Now let's get into the nitty-gritty. How does this whole thing actually make you money? It really boils down to four main wealth generators.
Number one is appreciation. Pretty simple, right? It's when your property goes up in value. Sometimes this just happens naturally because of the market. That's natural appreciation. But the cool part is forced appreciation. That's when you do something to make it more valuable, like renovating the kitchen or adding a bedroom.
Next up, and this one is huge, cash flow. This is the money you have left over at the end of the month. So you collect the rent, you pay all the bills, the mortgage, the taxes, insurance, you name it, and whatever's left in your pocket, that's your cash flow. Honestly, if a property isn't cash flowing, you probably want to run the other way.
All right, number three is a biggie, tax savings. Now this totally depends on where you live, so you gotta do your homework. But generally, you get a lot of tax breaks as a property owner. You can deduct all sorts of things like your mortgage interest and repair costs. This can make a huge difference to your bottom line.
And the last one, number four, is my personal favorite, loan paydown. This is just beautiful. Every single month, your tenant pays you rent, and you use part of that to pay down your mortgage. So they are literally buying the property for you. Your debt goes down, your ownership goes up, and you barely have to do a thing. It's awesome.
So now that you know the four ways you make money, how do you actually know if a property is a good deal? Well, it all boils down to running the numbers. Let's do a super quick example so you can see what I mean.
Okay, check this out. Let's say you're pulling in $1,500 a month in rent. Now your expenses, and you gotta be honest here, include everything, come to $1,200. That means you're left with $300 a month in pure cash flow. Annually, that's $3,600. So what does that $3,600 a year actually mean? Well, that's where you get something called your cash-on-cash return. If you put down, say, 60 grand to buy the place, that $3,600 is a 6% return on your money. So is 6% good? Well, it depends, right? You might be able to get 7 or 10% in the stock market. It really shows that cash flow is just one part of the equation, but your job is to get that number as high as you can.
Okay, this is the million-dollar question, isn't it? Where on earth do you find these great deals? Remember, price is what you pay, value is what you get, and your job is to hunt for that hidden value.
And just to manage your expectations, here's a good rule of thumb to live by. You're going to look at 100 properties, you'll probably make an offer on 10, and you'll be lucky to get one of them accepted. Seriously, it's a numbers game. And hey, if every offer you make gets accepted, you're paying too much.
And here's the secret sauce.
You need to reframe how you see things. Problems are actually opportunities. You want to look for the stuff that scares everyone else away. A weird smell? A little paint and new carpet can fix that, but it can knock thousands off the price. A room that could be a bedroom? Boom, instant value. A yard that looks like a jungle? Or a roof that needs replacing? These are problems with clear, known costs. They're bargaining chips that can get you an incredible deal.
All right, let's wrap this all up in a neat little bow. The pros, they're huge. Leverage, hustle paying off, and multiple ways to profit. The cons, also very real. It's a grind, you'll deal with headaches and tons of paperwork. How do you make money? The 4 pillars: appreciation, cash flow, tax breaks, and your tenant paying down your loan. And how do you find the golden goose? You look for problems that have easy fixes.
So there you have it. You've seen the dream and you've seen the reality. We've talked about how it all works and even where to look for those hidden gems. So now there's really only one question left to ask. Is this your path to financial freedom?